In today's video, we're going to discuss how to get tax benefits for your travel business so that you can maximize your deductions and grow your business. In order to help you grow your business, we're going to focus on the top 4 action items that you can take advantage of now. Action item number 1, change your W-4 withholdings. According to CNBC, in 2020, the average taxpayer got a refund just over $3,000. Now, if you currently find yourself in a situation where you're getting refunds upwards of over thousands of dollars, you definitely need to change your W-4 withholdings. Now, just imagine this. You have thousands of dollars that's tucked away with the IRS, and they're giving you that money back the following year in a refund for money for which you earn, and you just have it sit tucked away. And when you get it back, you're getting no interest at all. But just imagine this. You have an unexpected expense that comes up, or if you want to invest in a business opportunity that you just became aware of, what do? You can either pretty much go in your bank account and take money out of your bank account, use your credit card, or take out a loan if you choose to do so. However, you have this money tucked away with the IRS for which you currently don't have access to other than a refund. You have it tucked away and there's no money in terms of interest that is being gained on that money. So that's why it's wise to change your W-4 withholdings and have your tax professional guide you in terms of the withholding amount to change it to. So talk to your tax professional, have them adjust your W-4 form so that you can take it into your HR department and they will update that so you can get more of your hard-earned money back in your pocket so that you can take that money and invest in your travel business. So you will also teach your fellow entrepreneurs who are actually looking to get into travel, who may indicate that they don't have the money. So when you talk to them, explain to them that many aspiring entrepreneurs find the money to invest in their business by changing their W-4 withholdings. Maybe you can also get into business by changing your W-4 withholdings. That way you don't have to use your credit card or take out any loans or pull money directly out of your bank account. If you're currently getting astronomical amounts in terms of refunds, just educate your business partner on changing their W-4 withholdings so they can get in the business the same way that you came in, by changing your W-4 withholdings. So there's also an IRS W-4 calculator online that I'm going to include in the description of this video so that you can actually go through that process and updating your W-4 also. But the first step is go to your tax professional, help them guide you through filling out the form so that you can bring more of your hard-earned money back into your pocket. Or if they're unable to help you, you can just go to the IRS tool online to that withholding calculator, and they will walk you through the process of adjusting your W-4 withholdings. Action item number 2, employ your kids and put them on the payroll. If you're currently paying your kids an allowance to participate in your business, stop doing so right now. I see that a lot of kids are actually participating in their parents' travel business. And they're actually doing social media work, and their parents are actually paying them an allowance, and they're not even getting a tax deduction for that. So if you're a sole proprietorship, or you and your spouse are a partnership in your travel business, stop paying the kids an allowance. You should actually put your kids in your business and employ them. So I know you may be saying right at this point in time, it's not even legal to employ kids. And I would refute that. And I'm going to point you to a section on the IRS website that talks about employing your kids in your travel business so that you can get a tax deduction for having the work done, performed by your kids in your travel business. And you may be saying, hey, well, what can, my kids actually be doing in my business? And I'll just say this. If your kids are in the process of actually performing social media marketing, or if you're actually making videos of your kids and promoting them in your travel business, or if you're actually taking still shots and posting this details out in social media of your kids could be making money by doing that. Now you may be asking, well, aren't my kids aren't they going to get taxed for being an employee? And I'm going to actually point you through all of that on the IRS's website so that you can no longer be wondering or guessing about any of this going forward. So head on with me over to the IRS website and we're going to walk you through this process. So we're on the IRS's website where I'm going to show you exactly where it talks about being able to employ your kids in your travel business. So I just wanted to point up here, we're on irs.gov, and I'm going to point you to a couple of sections here. So the first section talks about children employed by their parents. It says if the business is a parent sole proprietorship or partnership in which each partner is a parent of the child. It says payments for the services of a child are subject to income tax withholding. And we'll talk about that into further detail. Your kid will be in a position to avoid paying income taxes if they meet this criteria. So this is pretty much saying that your kid's income is subject to income taxes. However, if you pretty much keep it within under that standard deduction threshold, they won't be subject to income taxes. But we'll talk about that into further detail in the next moment here. Then you go down to the second bullet point. It says payment for the services of a child under age 18 are not subject to Social Security and Medicare taxes. If the child is 18 years or older, the payments for the services of a child are subject to Social Security and Medicare taxes. So pretty much what they're saying there is that if your child is under the age of 18, their income is not subject to Social Security and Medicare taxes. Then it says payments for the services of a child under age 21 are not subject to federal unemployment tax. That's feudal tax. If the child is 21 years or older, then the payments for the services of a child are subject to feudal taxes. Again, that's your federal unemployment tax there. So I'm pointing you directly to the IRS's website where it talks about the ability to employ your kids. So I'm going to go over to another section, which it pretty much says the same thing on this website. It spells out family employees. On the prior page, it indicated it had the bullet points on the criteria to specify to employ your kids. In this family employee section, it says the same thing. It just goes into more details without the bullet points. And again, same thing. I'm not going to read it over, but I will specify this. When you employ your kids in your travel business, you want to ensure that you have a job description for them that outlines what they're going to do, right? So let's say, for example, if you're going to have your kids do social media marketing for you, right? You want to have your job description that outlines that. But let's say you have a younger kid where they might not have the ability to use a computer yet, right? But you're going to use photo shots for this individual, or you're going to record videos for them in your travel business to market your travel business. So in that case, you want to make sure your job description outlines what that younger kid is going to do in your business. So they're going to be in a position where you're just going to take photoshops of them and take those photoshops and market it in your business, or if you're going to take videos of your child and pretty much market it in your business, then make sure you have that outline in that job description. So that's going to be beneficial for you in the event that you are ever audited. You have the job description that specifies what your kid's going to do, right? So that's going to be very important for you. So let's head over here onto the tax section, right? So remember, we talked about on the prior page, it talks about how your kid is subject to income taxes, right? And so what we're going to do is go over where it talks about where your kids is subject to income taxes. And it says here, payments are subject to income tax withholding right here, right? On this top line. However, to avoid that, look at your standard deduction. So your standard deduction is the amount that's deducted from the child's tax income before they're taxed. This is the same standard deduction that is utilized for you before they even tax your income. So, looking at the child standard deduction, it says that their standard deduction is $12,550, right? However, if you are claiming your kid, and most people do, they do claim their kids. So 12,550 minus $350, right? That's going to be 12,200. So 12,200 is the standard deduction for your child. So if you were to pay your kid upwards of 12,200, they're not going to be taxed on that income. Why? Because their standard deduction is 12,200. And how did I get that child standard deduction? It says single or married filing separately is $12,550, right? However, since you are claiming your child, there's an additional $350 that is tacked onto that. So in order for that child to avoid paying taxes on the income, they're going to have to take that 12,550 minus the 350, which gets them the 12,200, and you're able to pay them up to that amount in order for that child to avoid paying taxes on their income. So this is going to be beneficial for you because you get to write that amount off if you pay your kid up to that amount, or if you pay them less than that amount, right? You're going to be able to write that off on your taxes. It's beneficial for your kid also because your kid is not going to be subject to income taxes on that income earned as long as you have $12,200 and less. So what does that mean for you? Your child now gets to take their money and now pay for their school expenses. They're going to be able to pay for their sports expenses. They're going to be able to pay for their, whining and dining out with their friends. Whatever expenses that you were actually paying for your child before, they now get to use the money that you have paid them for services for your business. They now get to use their own money to pay for their expenses. So that's why I was saying before, stop paying them an allowance. So if you're going to employ them in your business, now your child has their own source of income to actually pay for their own expenses now. So you as that parent, you no longer have to pay for the expenses. They're now paying for the expenses. So, go ahead and set them up with a bank account on their own if they don't already have a bank account. So that way they can go ahead, use the money out of their bank account and pay for their expenses. And that way, it also helps you set up where if you're going to write them checks or, set them up with direct deposit, you can go ahead and have that money sent directly to their account.
Action item number 3. Take advantage of that home office deduction for your travel business if you're currently operating your travel business from within the confines of your home. So if you currently have dedicated office space from which your travel business is utilizing resources, you should be able to deduct the expenses from within that office space. So you actually have that square footage along with the utilities that can be deducted for that home office space for your travel business. It is definitely a missed opportunity that I see a lot of travel businesses miss, and you should definitely take advantage of that opportunity. So it doesn't matter if you own your home or if you rent your home, you will be able to deduct that office space from which your travel business is being utilized from within your home for that home office space. So what we're going to do is head over to the IRS website again so I can point this out to you as a point of reference from the IRS's website. So let's head over there again.
Okay, now we've headed over to the IRS's website. As you can see here, I'm on irs.gov. And we are on the section where it says how small business owners can deduct their home office from their taxes. So what we're going to do here is I'm just going to kind of go through it line by line that walks you through the process here. It says here are some details about this deduction to help taxpayers determine if they can claim it, right? So it spells out, employees are not eligible to claim the home office deduction. So what they're simply saying here is that if you are not the business owner, but you are an employee of the business, that employee cannot deduct the home office deduction on their taxes. However, you as a business owner who is using your office space from within your home for business, you can deduct the home office expense there. All right, then it goes in here. The home office deduction is calculated on Form 8829 and is available for both homeowners and renters. So again, where I talked about before, where you can be a homeowner or a renter to utilize the expense, you can deduct it on your taxes. Now it talks about Form 8829, and this is where the expense itself is deducted. But if since you have a tax professional, that individual will know how to complete the form for you. Bullet item here, it says there are certain expenses taxpayers can deduct. These may include mortgage interest, insurance, utilities, repairs, maintenance, depreciation, and rent. So it spells it out here, all the expenses that can be deducted for your home office expense. Then it goes on here, it says taxpayers must meet specific requirements to claim the home office expenses as a deduction. Even then, the deductible amount of these types of expenses may be limited. All right, then it goes into detail here. It says the term home for purposes of this deduction includes a house, an apartment, a condominium, a mobile home, a boat, or similar property. So it spells out here all the items that qualify for a home office deduction. And I know some of you may be surprised that a boat is on there, but if you're working on your boat and you're utilizing a specific space in your boat, it qualifies for that home office deduction. It also includes structures on the property. These are places like unattached garage, studio, barn, or greenhouse. Again, so if you're operating your business outside of these detached areas, they also qualify for your home office deduction. Then it said, doesn't include any part of the taxpayer's property used exclusively as a hotel, motel, inn, or similar business. So if you're using your property for, those items, you're not going to be able to deduct it as spelled out here. Then it goes on to say, generally, there are two basic requirements for the taxpayer's home to qualify as a deduction. Okay? There are generally must be an exclusive use of portion of the home for conducting business on a regular basis. So, for example, it spells it out here. A taxpayer who uses an extra room to run their business can take a home office deduction only for that extra room, so that as long as it is used for both regularly and exclusively in the business. Then it goes on to say the home must generally be the taxpayer's principal place of business. A taxpayer can also meet this requirement if the administrative or management activities are conducted at the home and there is no other location to perform these duties. Therefore, someone who conducts the business outside of their home, but also uses their home office to conduct business, may still qualify for a home office deduction. Expenses that relate to a separate structure not attached to the home may qualify for a home office deduction. They will also qualify if the structure is used exclusively and regularly for business. Now let's go to the last bullet point here. Taxpayers who qualify may choose to use one or two methods to calculate their home office expense deduction. The simplified option has a rate of $5 a square feet for business use of the home. The maximum size of this option is 300 square feet, and the maximum deduction under this method is $1,500. However, you can also use the regular method. And when the regular method, deductions for a home office are used on the percentage of the home devoted to business use. Taxpayers who use a whole room or part of the room for conducting their business need to figure out the percentage of the home for business activities to deduct their indirect expenses. Direct expenses are deducted in full. So your tax professional who does your taxes will be able to determine which is going to be the best method for you, either the simplified or the regular method.
Action item number 4, advertising and marketing expenses deduction for your travel business. This is one of the most missed opportunities for most travel businesses because they do not take advantage of all the advertising and marketing that they can do for their business. So, for example, you have your friends and family following you on social media, right? So what you're doing is actually posting content probably on a daily or weekly basis, just so your friends and family can actually see the content of your travel business, right? However, there's a big global people that are interested in your services. So you have family reunions that are coming up. You have proms, you have weddings, you have all these other events that are coming up and no one knows about your business at all. So what do? So you have social media, right? So what you can actually do is set up target marketing on Facebook to actually target specific markets. So like if you want to target people that are actually, going to have family reunions, if you're going to, want to target people who are, probably going to be going to prom, you want to target people who are probably going to have like weddings or other events. You can actually pay for that on your social media, and that will qualify your business for a advertising and marketing deduction. Take advantage of it. You have that afforded ability to do that. Or let's say, of course you're going to need business cards, right? That's marketing, that's advertising for your business. Or you may want to pay for video content to create content for your business to market it and get it out there. Or you may want to have your kids involved in your marketing content so you can produce some hilarious videos or actually photo shoots to market your business. Those all qualify for a marketing expense deduction, guys. Take advantage of it. So I encourage you to take advantage of this deduction. And what I'm going to do is actually point you to the IRS's website again so that you can have a point of reference so that you can see what I'm referring to here. So again, let's head over again for the last time over to the IRS's website.
Okay, we're at the IRS's website and we're in a section where it talks about small business advertising and marketing costs may be tax deductible. So again, I'm going to go through with you line by line so that you can see what I'm referring to here. So it says advertising and marketing costs must be ordinary and necessary to be a tax deductible. So an ordinary expense is one that is common and accepted in the industry. A necessary expense is one that is helpful and appropriate for the trade or business. An expense does not have to be indispensable to be considered necessary. So what is it talking about here? So for your travel business, right? Your ordinary expense, of course, since you are in travel, anything that you're going to do to market your business, let's say you're going to get t-shirts, business cards, produce video content, produce actual still content to post on social media. There are occurrences where you may have to go rent a car or travel to a certain destination to really market your business, right? These are all ordinary and necessary expenses to market your business. However, let's say that you were not in the travel business, right? And you were in another profession that was not travel. And let's say that other profession was, say, like plumbing. And in the plumbing industry, right? they wouldn't per se have a need to do certain aspects of the travel business because they're in plumbing. And the reason why I'm using plumbing, because you notice here it talks about ordinary, right? And it talks about necessary. So what I'm trying to point out here is that the ordinary and necessary expenses in travel would be different from plumbing. So if plumbing, the plumbing industry came and tried to utilize some of the expenses that you were trying to deduct, they wouldn't be able to do it. However, since you're in travel, you're able to utilize certain expenses that any other industry wouldn't be able to utilize because you're in the travel industry. So it goes on to say here are some a few advertising expenses that are usually deductible. It says reasonable advertising expenses that are directly related to the business activities. Again, you're in travel. You may have to go on a cruise line trip to really market your business, again, because you're in travel. Or you may have to fly on a certain plane to market your business. You have to fly in a certain class on the plane to market your business. You may have plane travel. You may have some other type of rail travel. You're going to do everything that you possibly can to market your business. You might have to stay in a certain resort. You might have to go to a certain beach. All of that qualifies for marketing and advertising. And again, because you're in the travel business. Going to the next line item, an expense for the cost of institutional or goodwill advertising to keep the business name before the public if it relates to a reasonable expectation to gain business in the future. For example, the cost of advertising that encourages people to contribute to the Red Cross or to participate in similar causes is usually deductible. So for travel, let's say, for example, there's a future cruise ship that's being built. However, there's a certain replica of that cruise ship that is in place now, where you want to really market that cruise ship that is coming up. And so you may have to go to a certain location where they're building that replica to promote and advertise it. Well, that's what they're saying here. Although you're not going to make money off of that cruise ship now, but you're going to make money off of that cruise ship in the future. So you may have to go to that specific location to where that ship is being built to really start some of your marketing beforehand to promote that cruise ship. That last bullet item here, the cost of providing meals, entertainment, or recreational facilities to the public as a means of advertising or promoting goodwill in the community. Again, if you wanted to take your travel business and market it in the community and provide certain meals, this is saying that that is a tax deduction for your business for its marketing and advertising costs. And this last item says generally small businesses can't deduct amounts then paid to the influence of legislation. Like, so what they're saying is here, guys, you know, you're not going to be able to influence, legislation, in the, at any government level and deduct it as an expense. So let's say, for example, if you're gonna, you want to take one of the politicians out for dinner or whatever, just to influence some type of legislation to pass a certain law for the travel business. So what they're saying here is that you're not going to be able to deduct that lunch with that politician just because you want to influence some type of legislation. You're not going to be able to write that off as an advertising and marketing expense.
Now, coming up next, I'm going to share with you some additional tax deductions that you can utilize for your travel business. I'm also going to share with you a downloadable link to those tax deductions. So like this video, subscribe, and we'll answer any questions that you may have in our next video.
Okay, we have over 90 business tax deductions that can be utilized for your travel business. Now, of course, some of these expenses may be applicable and may not be applicable to your business. So I'm just going to do a quick rundown of some of them. I'm not going to go through the whole entire list. And of course, starting out, you can see you have accounting fees, advertising and marketing, amortization, Bad debts that you cannot collect, banking fees, board meetings, building repairs and maintenance, business association membership dues, business travel, cafeteria health plans, car expenses to include gas, mileage, repair, maintenance, car washes, etc. Charitable deductions made for business purpose, charity or traveling to perform charitable services, cleaning, janitorial services, collection expenses, commissions to outside parties, computers and tech supplies, consulting fees, continuing education for yourself to maintain licensing and improve your skills. This is definitely going to be needed in the travel business for you. Of course, you might, want to hire contractors to perform some work for you. You have conventions and trade shows, credit card convenience fees, depreciation, discounts to customers, right here. Eating out while you're traveling for business, education and training for your employees, employee benefits, employee wages, entertainment for customers and clients. So you may want to take them out to certain sporting events or certain trips. You have equipment, and the list goes on, right? Because I'm just going to scroll through the rest of it so you can get a general idea of those additional expenses. I will make this list downloadable for you to obtain also.
Hey, if you really like this video, you're definitely going to like our upcoming videos that are going to be released on every Friday. So like this video, comment below, subscribe, and we'll see you on our upcoming videos that are released on every Friday.